I'm John Hanna for CityTV.net here in New York, and we have Dirk Van Dijk, Chief Equity Strategist, joining us from Dayton, Ohio. Dirk,
Hey, how's it going?
great, great, great. Just want to say that Dirk Van Dijk is from Zax.com.
Okay.
I missed out on that one when I was trying to do the introduction, but how are you today?
Oh, I'm doing okay.
Um,
Nothing too major going on.
well, we get some nice
Yeah.
sun here in New York. How about down there?
Yeah, I imagine that seems awfully welcome given the weather over the weekend.
Yes, yes, yes. All right, so Dirk, tell us about the what do you have for us?
Well, yesterday we got some pretty good news on the personal income and personal spending side of things, which is a pretty important report. After all, the personal spending or personal consumption expenditures represents 71% of the economy. So if that's doing well, then the economy tends to be doing pretty well. If it's not, then the economy isn't. And of course, personal income is what makes personal spending possible. Uh, the real positive news was on the spending side. It rose at a 0.8 percent rate in July. The expectations were that it was going to be up 0.5%. We also got a nice upward revision to the June number, which was down 0.1% instead of the down 0.2 that it was originally reported at. On the personal income side, we came in just a little bit below expectations. The expectations were 0.4. We came in at 0.3. But we also had a very nice upward revision to the June numbers, which were originally reported at minus 0.1. They came in at plus 0.2. So that, I mean, you combine the upward revision into June, and then the growth is happening off of a higher base. So up 0.3 off of that is actually better than if we had a unchanged base and we're up 0.4. So I consider that to be a very nice positive surprise. Furthermore, the composition of the growth in personal income was of much higher quality than we've been seeing of late, and also the revisions to the June numbers will also improve the quality of the numbers. The highest quality form of personal income growth is if wages and salaries are going up. Right, that tends to be widespread. People tend to spend out of their wages and salaries. And we had a total increase at a seasonally adjusted annual rate, so don't try and multiply this by 12, of 42.4 billion in total personal income. That's up from a rise of 27.7 billion in June, but again, that was after a positive $9 billion revision. It was originally reported at up 18.7 billion. And if the wages and salaries increase accounted for 24.2 billion, and in the revision, almost all of that upward revision to the new number came from the wages and salaries component, which is now seen as being up 8.9 billion instead of actually declining at 2.9%. And furthermore, it was pretty much all from the private industry side. We actually had private industry wages and salaries went up 24.3 billion. Meanwhile, government wages and salaries actually fell slightly by 100 million with an M. And I mean, government wages and salaries have been very, very anemic for a long time. People who are complaining about, this incredible rise in government spending, quite frankly, don't know what the heck they're talking about. You're certainly not seeing it in higher, government salaries or more government workers. Those have actually been declining. And I mean, just to keep things in perspective, if you look at the total amount of wages that go to private industry, it's about $5.5 trillion a year, relative to the total for government, all levels of government, federal workers, the state, local, includes the postal service, teachers, etc. They add up to almost $1.2 trillion. But since November, the total increase, so it's about a 4.65 ratio of private salaries to government salaries. But if you look at the increase since November, or December rather, the private wages and salaries have gone up by $214 billion, while the government is only up $3.6 billion. So you're talking about a 67 times increase in terms of the private side over the government side. Other areas that we saw, some pretty good increases in income were proprietors' income, small business income, particularly non-farm proprietors' income. That increased by $3.7 billion, and we got an upward revision to the numbers for June. It's now up $1.9 billion rather than off by $0.3 billion as it was originally reported. So that's also a very high quality source of income growth. It's what you want to see. You want to see, the small businesses are generally considered to be the engines of employment growth in the country, becoming more profitable. So it's possible. The other area that we saw some very strong growth in is dividend income. Dividend income increased by $8 billion at an annual rate in July, on top of a $5.1 billion increase in June and a $5.8 billion increase in May.
All right. That's Dirk Dijk, Chief Equity Strategist at Zacks.com, joining us from Dayton, Ohio, and I'm John Hanna for CityTV.net.